Julia, your thoughts? Another day, another positive session.
James, last week was the best weekly gain that we've seen in 3 years, and we've followed it up with the 6th consecutive day of gains. Over the last 6 sessions, we've now seen a gain of 8.5%, and it's the strongest run that we've seen since mid-October. Today, the market up by 0.8%. If we have a look at what drove the market, we did see some positive economic news coming out. In fact, company profits up by 4.8%, beating expectations for a rise of 3% in the third quarter, and ANZ job ads stemming some of the losses we've seen over the last few months with a steady outcome. But that didn't seem to have much impact on the market at all. We also shrugged off the non-manufacturing China PMI numbers, which came out over the weekend, and they saw a pretty big collapse in the numbers from 57.7 to a reading of 49.7 for the month of November. In fact, the Shanghai Composite is down 0.8%. But the Australian share market really seemed to take its encouragement from the US futures. The S&P 500 futures up by 0.8%. We saw oil popping above 101 US a barrel. Iran still in focus, and the supply side of things still being viewed in the oil market, and that was good news for the energy sector. But one of the best performing areas today was the consumer discretionary space, and that's because the market has all but priced in an interest rate cut tomorrow, which would be good news for the consumer discretionary retailers. So we saw stocks like Myer up by a massive 4%, good volumes, and the 6th consecutive gains on the Australian market.
Level, are we still maintaining in some sort of a tight trading range, or are we close to breaking out into a new upward trend?
Technically, things are still looking good. If we have a look at the 52-week graph of the Australian market, this is what it looks like, and you can see we're going up to target that October high that we saw at 4,417 points. So that's going to be the challenge for the market. If we do break that October high, that would indicate a new phase of the market in terms of technicals. On the lower side, we're bounded by 4,135 points. So for the time being, they're the constraints technically for the Australian share market. If we do see a break of that 4,417 points, that would be extremely positive for the Australian market. Of course, it's being driven by macro factors at the moment. Last week, we got the coordinated central bank action. This week, it's the expectation that we're going to start to see some more liquidity being pumped into the system through interest rate cuts. We see the Reserve Bank interest rate decision tomorrow, but central banks around the world having their interest rate decisions. It's not just Australia that the market's viewing, but especially the European Central Bank, expecting to see a 25 basis point cut there, if not a 50 basis point cut, and of course the European Union summit. And the market really wants to see just one outcome out of this, and that is some sort of enforceable physical union coming through, just some key agreement from the key member states, and that should be enough to trigger some sort of emergency funding coming through from the IMF or the ECB or a combination of both for those countries that are in trouble in terms of the European debt situation. So a massive week for markets, but hopefully it will be a positive one, because generally the direction of interest rates influences the share market, and if we do see the direction of interest rates coming down, that should be a positive for the markets.
Outside of an ECB cut, as you say, which is widely expected, I wanted to get your thoughts. You mentioned the EU summit that happens on the Friday in European time. So much is being built into, as you say, getting some sort of fiscal discipline, some sort of coordination from the politicians. But is that in itself a concern, that so much is reliant on politicians when those same politicians have sort of come up short so many times?
For the time being, the signals are quite good. The headlines coming out, the media reports coming out of the Eurozone have been quite positive. We've seen coordinated central bank action. Merkel and Sarkozy are meeting today to nut out some of their joint policies and joint proposals, hoping for some sort of physical integration and agreement from key member states, and hopefully a deal by the IMF, ECB. But as you mentioned, James, if we don't see a deal coming out of this European Union summit, then it could very well be risk off once again for markets, despite interest rate cuts around the world. So a lot riding on this summit on Friday. The market hoping for some concrete details and agreements. Even though if we do see an agreement, we'll probably have to see a treaty change, and it's going to be a number of months before these changes are put into place. But the market at this stage hoping for some firm agreement from key member states around physical integration, and then hopefully that will trigger some emergency funding coming through from the IMF, ECB.
More in Europe in terms of after the break. Julia, one of the big stories, obviously, I suppose it's been a bit of speculation around for some time now, Aston Resources and Whitehaven Coal and a potential tie-up, and it seems Whitehaven at least confirming the two have been talking, though it has to be said, rather early stages.
It does look like the two companies are talking, and it would make sense for a tie-up because both of them are in Gunnedah. If we have a look at the two companies, Whitehaven Coal has 3 mines in operations and 3 in development, while Aston Resources, its mine still in development, but it is seen as having the largest untapped, undeveloped New South Wales coal asset. So if we have a look at what this merger may mean, we've seen a number of takeovers for coal companies in Australia this year. In fact, we've seen takeover activities surrounding the likes of Centennial Coal, Coal and Allied. We've seen it for Cockatoo Coal, Hanu. We've seen it for Northern Energy. We've seen it for Wesfarmers Premier Coal. New Hope Corporation currently looking at a formal sale process as well. So I guess a merged company would help fend off any potential takeover plays for the merged company. But also in terms of Aston Resources, it would be a positive for the stock. We know that a lot of mining has to do with the infrastructure which surrounds the project instead of just the actual asset. And because Aston is still developing its resource, the use of Whitehaven Coal's infrastructure would be a huge positive for the company. So we did see Aston shares doing well today, up over 4%, while Whitehaven Coal's up by 1.2%.